The Hang Seng, while it is in the green, up around 1%. The Taiwanese index is in the green as well.
The market was actually expecting that it will undershoot, that we will get some 3.3 number. Actually, the number is at 3.65 is clearly an overshoot of the poll.
The report also claims that $310 million across multiple Swiss bank accounts have also been frozen.
There's an ending diagonal pattern which gives us a level of about 25,450. We were almost there yesterday.
They are up more than 33% on a YY basis. This augurs really well for gold finances like Muthoot and Manappuram.
Flattish start and almost immediately in the red. So 25,370, so around where we left off yesterday.
This current pokerbazi transaction, they are the market leaders by far.
Westside does not only appeal to Tier 1 markets, it's as relevant today in Tier 2 and Tier 3 markets.
The market may have had a topsy-turvy ride through the year en route to a record high, but for the IPO market, it's been as smooth as a highway.
It's a Friday morning. Things are quiet after yesterday's monster rally.
The Chief Minister for Delhi is being released on bail by the Apex Court.
It is a day for mid-caps yet again. Not so much for the benchmarks today, Vivek.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's the day so far, and it's been a quieter day as compared, of course, to no comparison to yesterday, because yesterday was just an amazing time. And, you know, by this time, the market had zoomed about 150 points from 2 o'clock. No such thing today. It's listless and sideways, but there's enough happening at a stock level, which we will discuss. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague, Rima. Rima, hi.
Hi, but mid-caps are doing well, so that's where the action is. The mid-cap index is up close to about 0.8 of a percentage point, strong advance decline ratio. And for the week, it's still looking good, right? Because of courtesy yesterday's rally, 2% gain. Week to date on the Nifty, mid-cap index near 3% rally.
No, absolutely, and I think banks are also doing better, relatively speaking, because the Nifty is not doing anything at all. I mean, it's listless, but financials are doing better. Housing finance, Bajaj housing listing on Monday. I mean, I think that is lighting a fire under most of these housing finance names, which we'll talk more about with Abhishek in a bit from now. But look at the Nifty Bank itself. I mean, it's better. Now, in terms of level, the Nifty Bank is very close to the important 51,943 level. Okay, as we speak, we've taken that out. A convincing close above this. What is that? That is nothing but the 61.8% retracement from the all-time high, the fall of the all-time high. And we are about 10 points above that level. So hopefully, fingers crossed, we get a decent close above it. And then like the Nifty, for the Nifty Bank, we can wait for it to sort of move to its previous all-time high. Stronger sectors today, PSU banks, real estate, metals, IT services. Weaker sectors today, oil and gas, FMCG, and some sort of government companies, ex-PSU banks. Broader markets are higher, mid-caps, small caps, about 0.75% gain. Market breadth is positive. I just want to leave you with this thought, and earlier Latha was discussing this as well, but I think it's interesting and important. Could it be that next Wednesday, we actually get a 50 basis point rate cut and not a 25? So we'll get a cut, and consensus is 25, but could it be 50? The reason is very simple. Late yesterday night, I mean actually early this morning, there were two articles, one in the Wall Street Journal, the other in the Financial Times, both global publications with reach, and both articles kind of saying, well, 50 basis points is possible, it's a close call, it's on the table, etc., etc. Question is, could it be just a coincidence, or it's like an intentional signal, sort of a leak in that sense, which the Fed really wants out there. It's really reignited debate about pricing for that meeting, which is Wednesday. We'll, of course, react to it on Thursday morning. Rima.
So don't rule out a 50 basis points rate cut perhaps next week. But next week's going to be crucial. So one, you've got the Fed decision on the 18th. So we'll react only on Thursday. That's the 19th of September. But on Monday at 10 o'clock, Bajaj Housing Finance is going to list, and it's expected to be a blockbuster listing. Already the grey market premium is suggesting a doubler to start trade with, and it puts into focus the other housing finance companies, because if Bajaj Housing Finance doubles, its valuations, which anyway are at a premium to peers, only get that much more richer. So next week is also going to be crucial. But this week, at least today, things have been very, very quiet on the benchmark indices. We've moved in a narrow band. The mid-cap index, though, is holding up pretty well. We'll once again pull up those week-to-date kind of gains that we've clocked in so far this week. There you have it. The small-cap index lagging a bit with a 1% up move. Metals, PSU, Nifty, IT, these are the sectors leading from the front in terms of, up moves. On the way down, you've got FMCG. FMCG has had a good run, but today some profit booking visible in, the Nifty FMCG index. And one stock that we want to talk about is Bajaj Auto. What a run. It's the 5th day of gains for Bajaj Auto. This week, it's up 8.7%. In the last 1 year, it's up 145%. When was the last time you've seen a Nifty large company give you a 150% kind of return in a span of about 1 year? And I think one of the reasons is that the CNG launch, Freedom 125, is seeing some very good bookings. Bookings opened only about 2 months back, and since then, I think it's exceeded street expectations, and Bajaj Auto continues to get fired up. By the way, Europe too is on the front foot today, especially CAC and the DAX, with gains of about 0.3 to 0.5% coming through for the benchmark indices following the ECB rate cut that we had last week. So that's the setup as we enter into the last hour of trade for the day and for the week. Mitesh is now with us for a few closing strategies. Mitesh.
So I think, the call of working with financials is playing out a bit. I would still believe that the Bank Nifty should head towards 52,200, 52,400 zones and maybe even higher. So there's still some more space on the Bank Nifty, and disclaimer that we have some call option positions over here bought in today. So I believe that there should be some follow through and some covering of underperformance of the banking stocks, which should play out in the next few days. Having said that, Apollo Tyres is on my buy list. Keep a stop below 521. Look for a target of around 550 here. Actually, tire stocks have been doing well. CEAT has done extremely well, made a fresh high. So Apollo Tyres is also showing good traction on the upside. And I have a buy on Axis Bank with a stop at about 1200 for targets of 1250.
Okay, those are some stock calls. But let's get to, I think the big story of next week, perhaps on Monday, that's Bajaj Housing Finance's listing. And ahead of that, housing finance companies are also surging because there is talk about perhaps some catch-up in valuations. Abhishek joins in with more. Abhishek.
Well, Bajaj Housing Finance is one of the rare AAA rated entity in India with respect to the NBFC space. So, especially in housing finance segment, Bajaj Housing Finance, Canfin Homes, and LIC Housing Finance, they are the only AAA rated, entities. PNB Housing, on the other hand, Aadhar as well as Aptus are all AA rated. So, if you take a look at the valuation, I have calculated based on the Q1 FY25 net worth and the fundraise that they would do, it works out to be about price to book value of 3.2 times. Now, if you take into account the grey market premium that's hovering around 100% to this IPO price, then the listing would be around a 6.4 times valuation with respect to price to book value, and this may make Bajaj Housing Finance as the most expensive NBFC in India if it lists at 100% premium. If you take a look at the peer comparison, LIC Housing Finance, PNB Housing Finance, Canfin Homes are all already trading below Bajaj Housing Finance valuation at about 1.2 times, 2 times, 2.8 times respectively. Aptus value trades at about price to book value of 4.4 times. Now, Bajaj Finance, they have lowered their stake from 100% to about 88.75% via this IPO. So, at IPO, Bajaj Finance stake valuation with a 20% holding discount works out to about close to 41,400 crores. So, post the grey market premium, if you take that into consideration, the stake increases, or the value of the stake increases to about 71,000 crore, again taking into fact the 20% holding discount that is there for the holding. So upside to valuation would be around 6.3% based on where they are today from IPO to listing. Back to you.
Abhishek, so after 100, if it's a doubler, valuations go where? Just repeat those numbers. And where do, let's just put the other table of existing valuations of listed companies once again. Go on, Abhishek.
So currently at the IPO, at 70 rupees, the valuation based on Q1 FY25 net worth and post fundraise that they would occur or that has already taken place, the valuation works out to 3.2 times. Now, price to book value, that is. Now, if you take into account the grey market premium that we are hearing about 100% or let's say doubler of a listing, then the valuation would be 6.4 times based on price to book value. Again, the same book value that has been taken into consideration. And if you take a look in terms of any NBFC in India, none of them are trading at 6.4 times. So this might be the most expensive NBFC in India on Monday if it lists with 100%, 100% from their IPO price. So other peers right now are trading below the valuation multiple that Bajaj Housing Finance has. Is LIC trading at 1.2 times price to book value, PNB Housing Finance at 2 times, and also Canfin Homes at about 2.8 times.
All right, Abhishek, thank you very much for that. Prakash Diwan is with us, and I think Mitesh is also with us. But Prakash, good afternoon. So, what's the thing to do? Buy Bajaj on Monday morning, or you think, or one of these? Yeah, go on.
No. So here's what, Prashant, after listening to Abhishek, while the offer price of 3.2 times book value, it seemed more expensive than some of the other established names. I don't know what happens if you buy at a significant premium to the offer price. So I think it prudently makes sense to give it a pass for the simple reason that there's a lot of demand that's come in the IPO. How much of it finally percolates to a long-term hold is what we need to wait to see. So a lot of it will just, there'll be people who want to just flip it on listing. So once it kind of stabilizes, there's a price discovery equilibrium, then you probably make a judgment call. But right now, I don't think on listing it makes sense to buy it.
You think some of these rallies in other housing finance companies, I mean, PNB, for example, is re-rated from 800 to 1100. Some of the other, Home First is up 6-7% today. This is all kind of valuation catch-up?
Yeah, it is a rub-off effect. The entire sector is seeing some sort of a sale. But then PNB had its own tailwinds, given that overhang of a big exit was out of the way. And, all of those things happened. But some of them like Canfin, Aptus, and Aadhar, all of them have also got attention. So it's more of, these are days where capital is chasing certain pockets, and when it does with the ferocity, it does lead to some price expansion. But I would believe fundamentally nothing much has changed. It's only when the interest rate cycle makes any meaningful moves, that's when you'll have to look at it. But right now, it seems to be a little bit of exuberance and a rub-off effect.
Okay. Mitesh is with us. Mitesh, these housing finance companies, any trades here?
So I have one in my portfolio, and that's Aavas. I think, all these stocks are looking good. Canfin has made a new high. The PNB Housing Finance Company also, the charts are pretty positive. It's also trading near new highs. So I think they already have, in anticipation of Bajaj Housing Finance's listing, I think they've run up a bit. If somebody wants to buy a fresh trade, I think, then you might wait for a pullback for most of these stocks. But as I said, I think I have personally bought Aavas a few days back, and that's one stock which, when after a big underperformance over the last 2-3 years, there's some kind of long-term charts signal the long-term charts when the trend is turning on the upside. So I think once it starts getting past 1900, 1920 levels, I could look at a first target of 2000, but logically a more logical target of around 2350 to over 2400.
The stock has underperformed. In the last 1 year, it's only up 12%. And 2 years back, the stock price was closer to 2,300. This is today's chart, but 2 years back, the stock was closer to 2,200 and plus. So it has underperformed the rest of the markets quite a bit. By the way, I just wanted to once again remind the kind of wealth the Bajaj Group stocks, Sanjeev Bajaj Group, has made for shareholders. Bajaj Finance is up 28 times in the last 10 years, while Bajaj Finserv has moved up nearly 17 times. So, the Bajaj brand does carry a premium with itself. Let's talk about Bharti Hexacom. That stock is up 4.5%, but it's come off from the session highs. At one point of time, the stock was up close to about 8-9%, but still going strong with a near 4-5% gain. Now here, Jefferies has upgraded the stock to a buy. Their target price is 1,600, and the key reason is that we will see multiple tariff hikes going forward. Now, Jefferies' earlier base case was that the next tariff hike, we've just finished a tariff hike of 15 to 20%, and their view is the next tariff hike comes in only 2 years later of 10%. Now they've introduced another tariff hike. They're saying next year also in Q2 of FY25, we'll see a tariff hike of 10%, followed by another 10% tariff hike in Q2 of FY27. So basically, 2 back-to-back annual tariff hikes of 10%. The reason why they're so bullish on multiple tariff hikes is one, because Jio is focused on growth. Mukesh Ambani's vision is to double Jio's revenues in the next 3 to 4 years. And secondly, because Vodafone Idea is losing subscriber market share. So when your volumes are coming down, you need pricing, to support you if you have to meet the cash flow requirements. So that's the reason why, Bharti Hexacom has been re-rated. It's been upgraded to a buy. And according to Jefferies, it's the best play on India's telecom tariff story. On Bharti Airtel too, for the same reasons, they've gone ahead and increased some EPS multiples, and the target price has been further increased to 1970. So now target prices are approaching 2,000 on Bharti Airtel. Prakash, we've spoken a lot about, the telecom space, but Bharti Hexacom continues to attract, investor interest. 1,600 on Bharti Hexacom, and on Bharti, it's a target price closer to 2,000 now.
No, I do agree. So, especially for Bharti Hexacom, it's been spectacular the way it listed at it was offered at 600 odd, and now 1,000 rupees higher is what the target price. But the problem with there is that it's just two circles, so it's not something that can kind of beyond a point have some optionality to grow and expand in terms of, even if the ARPU changes are so positive. I would still go with Jio and hence buy Reliance for the simple reason that the changes that they are bringing afoot in terms of the package itself on telecom, with so much of AI thrown in, with so much of storage thrown in, I think it's going to revolutionize the market. I would rather look at that to be exposed to that sector rather than a Bharti or a Voda or something.
Okay, no, I absolutely get that. By the way, Mitesh, if you're there, just wanted a quick word or two on a few names here. I think we have discussed Edelweiss in the past, locked up 10% from the morning. Do you want to put targets on this one?
See, Prashant, the last time the stock had rallied was 2017-18, and it got a monthly high of around 149, 150. I think it's heading towards those levels. Previous highs means that if anybody was stuck over those levels, you will see some significant supply come in. But I think a test of those levels looks very likely. So if somebody's holding, what my recommendation would be is to trail the stop loss now at about 106 and around 150. Try and take profits and exit over here.
We'll talk about jewelry names with Mangalam will put out a piece in just a bit. But look at what's going on. If you can have these names up, Tangamail is up 7%. Senco is up 6.5%. I think Tribhuvan Das is up 20%. Yeah, that's limit up 20%. Tangamail, there's Senco, there's Tribhuvan Das. There is, of course, that small company Motisans, which has been rallying non-stop all of this week. So this is one space which has got absolute momentum. Any of these you like, Mitesh?
All of them rally too much, Prashant. I think, look at Kalyan Jewellers, look at DP Jewellers, Abhushan and all. I think the rally has been too fast and too vertical. So from a fresh entry point, I don't like anything. Otherwise, the long-term charts are very good for most of them.
Even that Goldium, which I think Dipan was telling us earlier this week, that's up another 6.5%. And for the week, it's up close to about 14%. This one is a big player in the lab-grown diamond space. They export a lot, particularly to the US. Small company, but, Dipan finds it very promising with that added disclosure.
Absolutely. Actually, we should also take a note of the news which is flashing at the bottom of the screen. This is important. This is, of course, a statement coming in from Madhavi Puri Buch, the SEBI chairperson, and essentially saying that she's never dealt with any files of any of the business groups which was essentially named as part of allegations which were made by the Congress party at a press conference which was held recently. She says that, well, she's recused herself on many matters over and above what was actually required. Maintained a proactive continuing recusal list with SEBI over and above requirements. That's the exact list. So these are some of the comments coming in from the SEBI chairperson with regards to some of the allegations we've seen. From 2017 have disclosed shareholding in Agora Advisors and Agora Partners. Some more coming through at this point in time. Prakash, on these jewelers, as Mitesh said, too fast, too hard, too soon. But if you own it, great. Fresh entries, in any of them?
So I think what's important is that while this rise has been very rapid, once things stabilize, one needs to look at these companies from a slightly more longer-term perspective, and wherever there is balance sheet strength, wherever there is a clear-cut management prudence that is at work. For example, TVZ, Tribhuvan Das, you see it's not done anything much in terms of sales growth and all that. It's just now that they've started clocking that, getting into that 2,500 crore top line. Very decent margins, very conservative management, has a good balance sheet. So these are names that you would have to latch on to for the next 4 or 5 years. But of course, as Mitesh rightly said, right now you might seem like overpaying for it, but on any kind of a softness and correction, and the business model is also very asset-light, Prashant. You have to distinguish between these companies. There's a 35 showroom network, whereas the other one, Motherson, that Rima mentioned, just got 3 or 4, if I remember correctly. So people are just buying everything just because it's in the sector which has got very favorable headwinds. But I think if you differentiate, you'll get some very good picks here for the medium to long term.
Motison's Jewellers does have only 4 showrooms, and that also concentrated in Jaipur, basically in Rajasthan. So it's not really a pan-India player. I think last year's revenues were closer to 400 crore rupees. But let's, talk a little bit more about the jewelry companies, what's happening, the kind of rally that we've seen. Mangalam is now joining in. Mangalam.
Well, the bigger rally that we're seeing in the jewelry stocks are actually in the lower rung of jewelry stocks. It's not the titans of the world. Of course, Kalyan is doing extremely well, as is Senco and Thangamayil Jewelers. But if you look at the names like TBZ, PC Jewelers, Motisons, all of them are spiking in today's trading session. So I tried to, decode the reasons for all of that. Kalyan in particular, of course, promoters bought stake, of Warburg some 15 days ago. There were positive brokerage notes coming in yesterday. There was one coming in from HSBC as well. So that's rallying for its own reason. Everyone's looking at the slightly larger players as, on their journey to value creation, looking at Titan's roadmap itself. But if you look at the others as well, we're in the business end of the year when it comes to jewelry stocks. The second half of this year typically has the festive season, the wedding season and all of that. So increased demand is something that everyone is looking at. And thirdly, the most important reason is that there is the PN Gadgil jewelry IPO which has come by, so which is impacting positively all these local jewelry players. Because remember, PN Gadgil gets about 65% of its revenues from Pune itself. So then the street is wondering, what are the other regional players who should be benefiting from this accelerated formalization in the jewelry sector itself? And that puts to the fore names like Thangamayil, Motisons, as well as the others. But higher gold prices could be one of the reasons why second-rung jewelry companies benefit a lot more. Why is that? Because the larger players do not want to take any inventory risk, and as a result of which they hedge all their inventory. Titan, for instance, 100% of their gold is hedged. Senco, a little over 90%. Thangamayil, about 89%. And Kalyan as well says majority of their gold is hedged. But for smaller players, the ones which have 4 or 5 showrooms, they typically benefit when gold prices rise because a large part of their inventory remains unhedged and they gain from inventory gains. So maybe over the next couple of quarters, you would say inventory-related gains come by for these smaller players, and which is why they are rallying. For names like Senco, Thangamayil, etc. as well, 10 to 11% of their gold is still unhedged. So they stand to benefit from an increase in gold prices, as we've seen overnight as well. So that could be one of the other reasons why all these gold sellers or jewelers are buzzing around in today's trading session.
Thank you very much for that. International gold prices, spot prices are up 25% so far this year. But the Indian gold prices are only up 16%. And the difference between the two is because the customs duty on gold and silver was cut in the budget. So the Indian gold prices up 16% year to date, while international gold prices are up 24-25%. Get into a break. We'll thank Prakash for joining us. Prakash, enjoy your afternoon and the weekend. On the other side, we'll invite Jitendra Sriram from Baroda BNP Paribas Mutual Fund.
Okay, welcome back. There's 5 minutes to 3 p.m. Markets, of course, are holding with about a 25-odd point cut. Market breadth is positive. Financials are doing better. That's the lay of the land. Jitendra Sriram is with us, Senior Fund Manager at Baroda BNP Paribas Mutual Fund. Jitendra, good afternoon. Good to have you with us here in the new avatar. Congratulations. And I think we're speaking with you in this new role for the first time. So welcome back. Good to speak with you.
Yeah.
Jitendra, so what's the... I want to start with, of course, housing finance. And the buzz around Bajaj Housing, of course, is there. The listed names are already buzzing quite a bit. Just wanted your perspective. Abhishek was telling us that if it doubles, as is expected, it'll be about 6 times on a price-to-book basis. So what does this do? I mean, would it trade there? Would it, who knows, re-rate from there? Because in the IPO, people would not have gotten enough and they'd want to buy on listing. Or does it pull some of the others up as well, the already listed ones? What's the effect?
Well, my gut feel is that, given the kind of value creation that the group has done across various vehicles that they have listed on the marketplace, my suspicion is that most people will stay put for the long term with this group, and it is likely to, obviously it will be dictated by the kind of growth rates you see here and all that. But by and large, ever since, you had the largest mortgage player, HDFC, merging with the bank, there is a space for a large player here. So should not be too much of an issue to have somebody who can sustain with a premium valuation here.
Jitendra, hi. Afternoon, Rima here. So what's the broad call on the market now for the next 6 months? Because there is a lot of uncertainty. We've got the US elections. This is a seasonally weak period for global equities. So what is your own expectation? And can we see a price correction, just time correction? And therefore, how is it dictating the way you're constructing your portfolio now?
I think it's an interesting point that you raise. See, first of all, I think there are couple of levers which are there, which are probably much more stronger for India. One being the growth piece. India remains in haven of growth within the EM space. Also, when you compare it with the Western European markets or the North American markets or China, we do have a much stronger growth, and which is likely to continue at least for the foreseeable future. So there is no taking that away from us. So to an extent, if I see the frontline valuations at 21 odd times, I don't think it is too much of a euphoria there. Without doubt, there may be certain pockets of exuberance, etc., etc. But by and large, I don't think the markets are too expensive on the balance. The second factor being the cost of capital, which is that you have had multiple things which are helping the Indian markets here. First is you have an important event next week, which is the US Fed meeting. And if they contemplate a kind of a rate easing and they start on that path, you have potentially global cost of capital coming down, which logically will mean a softer dollar, and as it is, some movement of money towards emerging markets, which typically tends to come, which will find its own, India will get its own share as growth is quite strong here. Relatedly, I would also say that India's inclusion into the bond indices which have happened now, it also makes another demand pocket for Indian papers as well, which also helps brings down the coupon for Indian papers. So all these are areas which are fairly more structural. So you may have a situation where markets could time correct for say a quarter or so, allow for earnings to catch up. But by and large, I think we would be quite comfortable with a mid-teen kind of a growth for the Indian markets.
No, got it. So just a quick word on IT services, if you will, Jitendra. That's the other, I don't know if it is already consensus. Some say it's consensus, others are still turning positive. Motilal, for example, last week came out with a note saying turning positive. Generally when you talk to companies, it's not very clear whether demand is coming back in a big way or anything. What is your own sense? It's a bit of a defensive as well, but global facing.
Yeah, so what I would think is that, if US treads down this path of a rate easing, one thing for sure will happen is that it will give a kind of a booster shot to discretionary spending in that market. And this is a big market for all the tech names. So to that extent, at least there will be some tailwind arising for the sector. What we'll need to, of course, watch out for is the rate at which this discretionary spend comes up, which is, I think, the bigger gray area rather than the very fact that whether it comes or not. But I would think that, at the end of this month, you have a Accenture result as well, the full year result as well. So people will be keenly watching out for that commentary, trying to draw some cues for Indian tech as well on how that is going to shape up. But my suspicion is that you might see some acceleration in the coming from where we were in the last couple of quarters.
No, got that. One thing, Rima, on IT, TCS and some of the larger companies, when they talk about the macro environment, they usually do refer to interest rates.
Yeah.
Rates are too high. We don't know when rates will start to come off. Well, most likely they'll start coming off next week.
Yeah.
Right? So I don't know what it means for IT services stocks immediately, but at least it's something which managements have flagged off occasionally after quarterly numbers, etc. Yeah, I mean, that's Wednesday when we will know whether it's 25 or 50. And that basically is a big, powerful signaling effect for other emerging market central banks, whether they accept it or not. I mean, so we'll see if that does indeed come true. Markets, I think, are slipping a little bit more. We're down about 50 points now, so 25,340, which is around the last high. 25,333 was the last high. And of course, I mean, yesterday we took that out with that big move that we saw. Zomato is down about 3.25%. You got all these. Narayana Health is down about 4.5%. I think Eris Life Sciences. Some of these odd hospital pharma names are sort of coming off a little bit and are under pressure. But overall, I mean, in terms of just number of stocks up and down, it's clearly advantage. Large cap sort of gainers and what is up right now. And it's a big volume day once again, make no mistake. EPAC Durables is up about 9.5%. So again, I mean, I think this week, this one has gone up 30%. So it's like it's re-rated in a single week. PTC is up about 10% right now. And of course, the jewelers we mentioned, names like Edelweiss, KDDL is another one, which I'm seeing with very large volumes right now. That's a 11% pop on KDDL. There's, of course, that subsidiary Ethos, which is the luxury watch retailer, which has done well. But KDDL itself is up about 11.5%. Westlife is up about 6.5%. 854. I mean, you go down the list and there's a lot more which is happening at this point in time. Jitendra, we'll leave it there for now. Thank you very much for joining us and running us through what you're making of things. And we look forward to our next conversation. Thank you and good luck. And good to see you again. We'll take a quick break here. We are back with what's happening in dealing rooms. So Nimesh is going to be with us on D Street Chatter, and then we'll get you some short-term trading ideas when we return. Stay with us.
Welcome back. As promised, let's get a check on what dealing rooms is saying this Friday afternoon. Nimesh is joining in with his insight. Nimesh.
Hi, Rimano. After a big move in the large cap stocks yesterday, today's a day for the mid caps to outperform and do a bit of catch up. So that's the space which is buzzing in trade and backed by FI buying, institutional buying as well. So the broader markets have done well today. A lot of stocks are buzzing as well. Even from a Nifty point of view, while it's been consolidating, looks like there is a fresh breakout after yesterday's big move. So technically, we are in a new zone now. So it looks like the momentum can continue at least in the near term. The sector of the day is clearly the NBFCs and housing finance companies. Though all stocks are buzzing in trade, largely on back of anticipation of potential rate cut, and they are the biggest beneficiaries, at least in the first in the initial period. And also there is this Bajaj housing listing on Monday, which can have a big impact on the entire housing finance sector in the near term. So that's the reason why you're seeing a big move on those names. Additionally, from a flow point of view, metal is a sector which is seeing some of the buying back. So not only the metal PSUs, but even the private metal names are buzzing, and there is a bit of institutional buying as well, in that space. So from a flow perspective, it's still positive, and we saw a big number yesterday as well, and looks like the momentum is now catching up with the broader market stocks in today's market.
What about individual stocks, Nimesh?
Well, so the first name is Midday, a large block. Stock is down 1.5% after a large block. 4.5% equity got changed hands. There was a large block last week as well. Looks like this is a final exit from the PE investor in today's block. So the disclosures could be quite interesting in Midday today. So that's the first name. The second stock is FDC. The mid-cap pharma has again seen some bit of traction now. We saw a big move yesterday. There was a large volume as well. I understand one of the domestic mutual fund fully exited yesterday, and some large HRIs have bought as well. And the city is anticipating some corporate developments well in FDC. So that's the second name. The third name is Protein eGovern. We saw a big move in the last couple of months in Protein eGovern. Off late, it's been consolidating, but again, there is a strong indication that maybe a large block is expected soon. Remember, I had highlighted in the past as well, NSE owns could go close to 20%, and they need to bring it to 5%. So potential 15% block can come in Protein eGovern. Could be OFS as well. So that's the chatter on Protein eGovern. And the last is Coforge. In general, we've seen a bit of selling pressure in the PSU basket of late, but looks like the selling in Concur is largely over. Fresh buying as well at these levels, and a bit of interest is back from larger HNIs and institutions in Concor.
So Nimesh, you said that in Protein eGov, NSE has to bring down its stake from 15 to 5%.
Correct. That's the regulatory norm, and that's the reason why the state is anticipating a big block in Protein eGov.
Okay, thank you very much for that list of stocks and chatter. Mitesh is now back with us for a few BTST calls that one can play for the weekend. Mitesh, it's still very flat. It dipped a bit, but then again, it's moved up by a couple of points. What would be the trades?
So, I think it's dipped a bit, but, again, it's the banking name which is giving strength, and therefore I think, HDFC Bank can be taken as a BTST. Keep today's low as a stop loss, which is about 1657, and a target of 1680.85 can be looked at. The other one which I like is Kotak Bank. Here I would recommend the BTST with a stop at about 1812 for targets of 1840.
Okay, all right, Mitesh, thank you very much for that. So those are some short-term trading ideas coming through. DLF is surging in trade. CLSA has got a view on the name. Sonal is here with that. Sonal, good afternoon.
Good afternoon, Prashant. Well, there was a management meet takeaway which CLSA has consolidated and compiled. They have a hold rating on the stock with a target price of 775 rupees a share, which is lower than the current market price. But the commentary was strong. They speak about a 15% growth in pre-sales and rental income going forward, and their cash flows, which have been improving, they expect further growth coming in there as well, and growth in EBITDA as well. The company says they are very positive on NCR market. There is no sign of over-exuberance because that was the chatter and debate around NCR market so far. And capital allocation with respect to the free cash flow that the company has been generating of late will be towards dividend, capex and new land buys as well. So they are looking at expanding, but it will not be pan-India. They are looking at markets like Noida and Mumbai. In Mumbai, they have signed an SRA project, but they are not looking at the presence across the country and only looking at some of the micro markets. They are concerned, however, about the rise in scale of pan-India expansion by many of the peers. We've seen it with Prestige, we've seen it with Godrej, Puravankara now coming to Mumbai market. They say it could lead to execution risk, and that is what they are worried about, and that's why they are only focused on few markets. But overall, the strategy and their targets is something that the street seems to like.
Okay, well, thank you very much, Sonal, for that. So that's DLF in sharp focus for you there. Hemang Jani is with us with what he'd make of things. Hemang, good to have you here. Thanks for joining us. In the real estate space, I was reading a note from IIFL this morning. There's a report. Essentially, their contention is in H2 of 25, we will see about 1.5 crores worth of new project launches. That is double of what we've seen in H1 of 25. We're talking about supply in stock markets. Well, guess what? This is supply in real estate. I guess the strength of the market is such, I'm assuming it'll all get lapped up. But your thoughts on the space and what you like here?
Yeah, good afternoon, Prashant. Thanks for having me. I think clearly real estate as a space has done so well. And what is really surprising is that despite the kind of momentum that we've seen so far, both in terms of their performance and the stock prices, both, the overall momentum in the new project launch and the kind of response that people are getting is amazing. Just to give you a perspective, Godrej launched one project in Kandivali, and in a matter of 24 hours, 80% of the property was booked at a price of almost about 42,000 a square feet. So that is the kind of response that they're getting, and it's not confined to only Mumbai, but NCR and south side, everywhere that is a response. And when you meet up the companies, what they are saying is that the pipeline is still very strong. So I think at least for the near term, let's say another year or so, this momentum will remain strong. Now, coming to what one likes at this point of time, clearly DLF, because on the commercial side also we are seeing the yields getting a little better, and that would reflect in the DLF's performance. Also, I think Lodha looks to be a good bet given the project pipeline they have in Mumbai.
Yeah, no, absolutely. There's a lot of these projects, right? I mean, you just have to look around, and the amount of construction which is going on pretty much all parts of the city. 42,000 rupees in Kandivali, huh? Hemang, that's what I heard that right, correct?
Yeah, absolutely. And people are queuing up actually, for the liking that you may have for a higher floor, you may not get it, so you may have to compromise there, but still people want to get into it.
Amazing. I mean, just amazing. I just want to highlight one more name. IIFL is up sharply. I mean, I think the intraday will tell you the spike here. It was trading about 1.5%, 2% up in the morning, but it's gone up all the way to being up 7%. So if you can have the intraday up, that's NBFC. There you go. That's what I'm talking about. And I think the moves basically come in after 3 o'clock, maybe a little before 3, but largely bulk of it in the last 20 minutes or so. So that's something to highlight. Godfrey Phillips is up strongly. I've highlighted many other names. Godfrey is up about 10%. Bandhan Bank, Ambrish was with us yesterday, and Ambrish was talking about how he likes Bandhan. Bandhan is one of the few names which is still, I think, within 10-15% of COVID lows. So that is up 5%. That was Ambrish's pick yesterday. Jubilant Pharma is another one which is up about 13%, big mover. Oracle Financial Services is up about 6% or so, and so on and so forth. Anything you like, are these jewelers which are doing very well? And especially, Mangalam was telling us it's the smaller ones which are doing better. And one of the reasons at the margin, new reasons, right? The old reasons in terms of demand and structural story, etc. is that some of the smaller players will have lower amount of hedged gold. So when gold prices rise sharply, they tend to benefit, unlike the larger ones where most of the inventory is fully hedged. Your thoughts, Hemang?
So I think this gold prices going up and hedging would be not a meaningful at the margin level. You may have a small effect here and there, but I think what's really happening is that when you look at the smaller companies, of course, Titan also has started doing well off late, but the smaller companies like Senco and Kalyan, those kind of companies, they are showing a very good growth, vis-a-vis the larger players. There is a certain amount of margin stability that one is getting, and the custom duty cut surely has helped them. So, people are liking that because of the kind of discount and the growth which is there within the pack. What we like at this point is Senco, because they have done a reasonably good expansion. And next 2 quarters, they have given a growth outlook of about 15 to 18%, which is quite good. So this is something that we prefer at this point of time.
So Senco is a stock that you recommend to your clients, right? It's a stock that you hold in your portfolio.
Yes, we do have a coverage on that. It is also part of our portfolio as well.
Even in the Motherson group, there is news about that QIP. Can you talk a little bit more about it?
So, Rima, typically, if you look at Motherson's strategy, they, do go out and acquire companies in a smart way. Over the last few years, they have done acquisitions worth of almost about 18 to 20,000 crore. So I think, at a good market opportunity, they tend to kind of do this kind of a fundraise so that whenever there is an opportunity, they can actually, take advantage of that. The only point, one have to consider is that if you look at globally, some of these companies, they have downgraded their guidance, be it BMW or some of the, larger ones, including JLR. The guidance is not sounding that confident. So I think we think that in the current scenario, while the fundraise could be a good thing for the company, but the growth outlook may not be that good given the dependence that Motherson has towards the PV industry. So we would be more comfortable buying into a, let's say, ancillary company which is two-wheeler focused or EV focused versus something like a Motherson.
Okay, Hemang, do stay on. We just want to get our viewers the CNBC TV18 exclusive about the retail space. Now, Trent is planning to open 30 to 40 new Westside stores every year. So in a very rare conversation from the sidelines of the Westside Media Day with CNBC TV18's Shilpa Ranipeta, the company's CEO and the COO talk about Westside's expansion plans in Tier 2 and Tier 3 cities.
We're thinking about between 30 and 40 stores every year. We've consistently maintained that we will do stores that stand up to a certain minimum standard. We're thinking of stores which are at least 20,000 square feet and more, iconic, and make a difference to each customer that she can relate to in a particular micro market. In many ways, Westside does not only appeal to Tier 1 markets, it's as relevant today in Tier 2 and Tier 3 markets. In a particular market, whether we find the right location, whether we find the right building scheme and the economics work. If some of this come together, we're very happy, and actually very happy to be in multiple micro markets rather than in lesser number of micro markets. Indeed. We already have several cities where we are present, towns which we are exploring. So it's something which is clearly on the radar, but it is not in exclusion of what we do in Tier 1.
Welcome back. Wipro is going to go home as the top Nifty gainer, notching up an up move of nearly 4%. Compared to many of its peers, Wipro has underperformed, stock price and even financially. But there has been a new CEO on board, and can he turn things around for Wipro? Hemang, coming on Wipro, this is a stock where valuations are relatively cheaper, and therefore time and again it's attracted a lot of investors, hoping that the company will, eventually start matching up to industry growth rates. But it's not happened. But now there is a new CEO, Srinivas Pallia. Would you be more optimistic? Is Wipro a stock that you like?
So Rima, of course, when there is a new CEO, people would have some expectations. But if you look at last 2 or 3 years, Wipro time and again has not delivered versus the expectations, or it has not been able to outperform the industry growth rates. So when it comes to recommending a stock or the stock performance, what matters is how the company is delivering versus consensus and what kind of growth and valuations it's available at. So when I look at the entire space, what stood out for me was the fact that you had some sort of a positive commentary from Infosys, to some extent from HCL Tech and TCS. So when I see the actual performance, I think it makes more sense to go with those names, particularly HCL Tech or Infosys, given the valuation comfort, or for that matter, LTI Mindtree, where there is a little better outlook in terms of growth. So Wipro, while it has underperformed, it does not create enough justification to get into it at this point of time.
Not enough justification to get back in at this point in time. Mitesh is with us as well. Mitesh, any thoughts on IIFL? A 9% move now, 530.
So I've not been tracking the stock percent. Difficult to comment on that. Please.
Okay. I think the broad range has been, it's gotten to 500 a few times, but basically it's not managed to hold it since. The big, disappointment, of course, the big shocker happened when the gold loans were banned by the RBI. Stock fell from 600 all the way down to about 300 rupees. And since it's struggled since. But today is turning out to be a pretty decent and large move in that sense. So that's the name right there on your screens. What else? Mitesh, technicals, you'll change outperformance and what is leading and where is momentum. I don't know if Bandhan is, again, something you've tracked lately or not. But fundamentally, Ambrish was with us yesterday and he had this on his list as a pick.
See, Bandhan is something, which is it has been a very big underperformer and now it's trying to revert. So yes, there is some traction on the charts, but we still don't have a signal of a long-term trend reversal. I think it will give you a trading bounce back to the first target of 210 level. And then, maybe to about levels of 222 to about 224. I think beyond that only we'll look at a bigger reversal, which might still take some time.
Okay.
Hemang, what about SpiceJet? Its stock is up close to about, 10% now on SpiceJet. And despite all the financial troubles, grounding of airlines, etc., Hemang, the stock has done pretty well. Year to date, I think SpiceJet is up close to about 20%. In the last 1 year, it's got an 82% return.
Yes, Riba, I think the stock actually underperformed big time, in the last 2 years. But what is happening over here is that the company has been able to, do a bit of a restructuring and recently, with their large investors, they could do that restructuring wherein there is going to be part of the interest is going to be converted into equity with a conversion price of 100 rupees. Also, there is a possibility of one more round of fundraise to the tune of about 1,000 to 1,200 crore. So once you have that kind of money coming into the company, it will surely, improve the balance sheet. And when you look at the sector per se, both in terms of growth, the crude prices, are now at a much more comfortable level. So people would want to get into something which is a slightly high beta, but it can give you much better upside given that we have hardly 2 listed companies in this space. So from that perspective, this stock is looking quite interesting.
Thank you very much, Hemang, for joining in. Mitesh, any quick trades, any stocks you'd want to highlight for Monday?
So I think, as I said, it's the bank Nifty or the financials which remain on my radar. Even in them, some of the private sector banks look good to me. I've already given a buy call on HDFC and Kotak Bank, and I think the one which I like otherwise also is IndusInd Bank. It's made a high of its 200-day average, which is at about 1472 right now. I think once it clears the high, then I think we are looking at a trading rally to about 1520 odd levels. And that about, I think, we'll take it on Monday as to how the news flows.
Thank you very much for joining in. Counting down to the day, and it's going to be a flat close on the Nifty and the Sensex, mildly lower on the benchmark indices. But this is the week when the markets hit new all-time highs of 25,433. And from that level, we're closing about 100 points short. Mid-caps outperformed. The mid-cap index was up close to about 0.6%. Positive advance decline ratio, and for the week as well, both the Nifty and the Sensex go home with good gains of about 2.5%. Sectorally, Realty did well, that was the top gainer. PSU banks higher by more than 1%, metals bounced back, and IT2 provided strength. And on the way down, oil and gas and FMCG took a bit of a backseat.
I mean, a good going all across. I think this is a pretty sort of healthy kind of day, although on the Nifty it doesn't seem that way. But you just actually don't look at the winners. Look at the broader market losers, and you very quickly realize that, actually there are about 8 or 10 names with any volumes on the downside. That's it. And then you'd struggle to look at stuff which fell on large volumes. So the volumes are all very much still on what was up, and it's a big volume day for gainers in the broader market. And I think that's essentially what you should look at. Even actually, if you look at the Nifty and that 40-point cut or so, it's a couple of insurance names which were lower, HDFC Life, SBI Life, etc., and one or two other names. 1.5% in that range. But bulk of what, of course, happened was on the upside. There is no two ways about it. So we leave at about 25,344. I don't think the adjusted close should be very different as compared to where we finally leave at. Nifty ends about 2% higher. That's Friday to Friday. And I think the Nifty Bank will end about 2.6% in the green. The Nifty small cap index and the mid cap indices, 1%, I think, on the small cap index, and the mid cap index, we have about a 2.5% pop. So these are weekly changes that we leave with new highs this week, earlier yesterday on both the Nifty and the Sensex. It's a wrap on this edition of Closing Bell, but don't go anywhere. Our special editors roundtable will pick up on the action in just a bit from now. Stay with us.